I hate to say I told you so, but I did warn you over the last few weeks that we had new lower lows coming, as even the fear and greed index is back into bear market territory, and Bitcoin just had its lowest close down at 94,000 in almost 200 days. In other words, if you don't wake up and pay close attention, then it's very much likely you're going to get wrecked, because we are approaching one of the most difficult periods of this entire cycle, and you're going to have some important decisions to make. If this is truly the start to a bear market, which now I'm beginning to believe it is, and the top for Bitcoin was 126,000. The top for XRP was $3.66. The top for Ethereum was 4,900. And against these cryptos, virtually all altcoins are down even worse. But the question you have to ask yourself is, if this is the start of a new bear market, are you wanting to hold that bag through the entire bear market because you plan to invest over the next 5 to 10 years? Or would it be better to de-risk just a little bit, to sit on some cash for new lower lows? Now, the reality is that nobody actually knows where the market's going to go, but I predicted this with a very high rate of success because of the technical analysis that I do on a daily basis, which takes me no more than 10 to 15 minutes once per day, and it's something that I can teach and train you to do as well when you join Altcoin Pro University. You can find the link in the description below at altcoinpro.com. We have so many members that have been with us for more than a year now, and you don't want to get caught this cycle. If anything, you want to take advantage of the cycle, because when we launched this thing, there was tons of money to be made, and there still is. You can still make money shorting the market and positioning yourself properly into the next bull market. Even if this market continues, you're going to be up to date on our live calls or inside of our community, which is bar none the best in the space. And the video that I'm going to share with you right now is actually the prior Technical Analysis Tuesday call that I hosted for our students, where I was telling them exactly what has happened so far and how to prepare for it. And if you want to join that, then be sure to become one of our university members. But either way, the stuff you're going to learn in this video is crucial to understanding how to manage your portfolio in messy market environments like this, and exactly how I predicted that we were going to dump for further lows. So lean in, set aside all distractions, and let's dive into the video. And as always, my friend, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome to the Tuesday technical analysis call. It is November 11th, 2025. And this last couple of weeks, we've seen a lot of, price action to the downside. But before I began the call, I wanted to dive into something that I think is actually quite valuable to look at. And that is the candle close time. A lot of people on these calls might not, I don't know what's going on with TradingView. It's like just glitching out. Let's go to that daily time frame. There it is. Okay, so notice I just clicked auto and log. I like keeping the logarithmic scale on. Those disappear if you do not hover over the price action, okay? Another thing that some of you guys might not see, notice how I'm trying to like drag this and it won't. It's because I have it on auto. And when I click off of auto and then kind of use my mouse to scroll, it can do, zoom in, zoom out. I can grab this and drag it. I can double click on this pane, click and hold and move around. I know it looks very, messy when I'm doing it, but it's something that I think you should get used to and comfortable with if you're looking at charts, because then you can really dive into the details of a candlestick or in the price action. If, for example, this area matters, like just looking back, right? Let's say it looks like this. And like, I don't have a good picture of what's happening on the chart there. That's still the same price action. And you'll actually see people online share stuff like this sometimes, where, for example, let's say they go to like a 5-minute time frame and they will zoom into an area. Let's go to October 10th. It's the 17th. Here we are. So notice this right here. Like, this was a very big dump, but they'll make it look bigger than it actually is by literally just dragging that and like, look, puke, right? This is a nasty dump, and they really make it, and it was. But the point I'm trying to make is things can look scarier than they are. The price up here was about 122.5. And in a very short period of time, the price dumped to 118 before seeing some level of support. And what they will do, right, is like make it look like that because they just drag. And so this is why it's important for everyone on this call and watching the replay or whoever's involved with Altcoin Pro to really understand how to use TradingView to look at a chart. Because this right here, I've seen this in the past and I've made the mistake, especially when I was newer to charting and technical analysis, of looking at someone's post online and saying, "Uh-oh, markets are dumping or puking," and then they share a photo, and I look at the chart or I look at percentage down on a simple app like Coinbase, and then it leads me to make a decision I otherwise wouldn't have if I had more context or I looked at the chart myself. So yes, I really do like using auto because auto kind of fits everything into the screen and will continue to as I pull more up. So whatever fits into the screen, it's going to try to fill the space on the screen, which is what auto does. Logarithmic just gives you a better percentage scale. So on shorter time frames, it doesn't matter that much. But from a weekly perspective, notice this. Like, let me click off of auto. Look at how small the price action looks back here in 2016 relative to the pump up to $19,000. Look at how big this scale looks from $16,000 to 120, right? But at the end of the day, some of these moves were actually bigger and you would have made more money back here than you would have made in here. And that's just because you're not using the proper scale. So I like auto and log. And so if you're not doing that already, highly recommend it. What it also is interesting is if I use, let's just say, the log scale, or better yet, let's use a non-log scale, okay? And I start drawing trend lines, things can look a lot different at some point in time. So for example, like right here, okay, let's just see if anything changes. I'm drawing through the majority of the sticks right here in the wicks and then trying to touch that wick. And let's see if I click log, and I really don't know. I'm just checking it out. And I'm trying to get this range right here. So I'm trying to touch as many points as possible where price action was supported, then rallied, supported, rallied, okay? And some people would use this. And typically on a longer time frame, this will tend to act as some level of a support, considering Bitcoin's probably going to see quite a bit of support here between 96 to like 93 before, if this is a bear market, before it continues to break down. That said, if I click on a log chart, look at the difference. The same line. I didn't move it. I didn't touch it. Look at this, right? So it kind of does matter. Like using a log scale, in my opinion, gives me a better perspective on the percentages. And now when you look at that rally from 214 up to 20,000 for the first time, let's just go ahead and grab from the bottom of those candles a percentage-based tool, which by the way, you can find on the left-hand side. So 1, 2, 3, 4, 5 right here. Okay. And it would be down here, price range, date range. I always favorite the tools I like and use more often. And this is my like drag and drop tool. So I don't have to consistently click through 50 of them. And I see them, I click, oh, look, bam. Okay. And you can always change the colors, pretty straightforward. You can click on anything, click on style, change the background, change the line, weight, all the stuff. So that said, this was a 9,600% move. From the bottom, and this is also a really big move, but look at the difference, ready? From the bottom of 2018, which at $3,000, I don't know a soul who wouldn't have loved to be accumulating a stupid amount of Bitcoin. Um, right? You would have only made 3,400% to present day, 33. So this is the major difference between a logarithmic scale and a normal scale. And a lot of people use normal scales. I, I don't understand why. I don't know if it's a lack of education. And I'm not saying everyone, or maybe, these are day traders in the stock market and they're looking at 15-minute time frames. And you'll notice it really doesn't make a difference on a shorter time frame, right? Look at the login auto. I'm clicking on that right now. It's not different because these percentages in a very short period of time from 12:15 a.m. over to, 2:30, what, a day or two later, 4 days later, isn't that big of a percentage change. But over the long run, it really makes a difference. It gives me a better perspective. And so another thing that's going to give me a really good perspective is to know when the time, when the candle closes. So for example, let's just go to that 15-minute time frame, and you'll notice that already there's about 10 Bitcoin traded on Kraken, which we had the daily close at 4 p.m. now because Universal Time, which is right here, right, just started 15 minutes ago. So it doesn't change where we have daylight savings time. I think a lot of people all over the world do. I'm not too sure wherever, if you're at like in London, I think they change as well. So that said, you just have to double check. It used to be 5 for me, p.m. Pacific Standard Time. Now it's 4. UTC didn't change, but I always keep my time frame on UTC. Again, we're going through some of the basics, but I actually think a lot of you might be charting and stuff and probably don't actually fully understand these, or you might have one or two settings off. Now, I'm not saying you have to have everything like me, but I actually have found that this is the most valuable way to understand and look at charts. And it saves me a lot of time in the long run. So, okay. So that said, notice how now I have this 3 minutes. Okay, let me click off of auto just so I can really zoom in there. Okay, and I'll just drag and you can do all that. And you'll notice that every single one of these candles, right? This one from here to here was a 5 minute, 5 minute, 5 minute. We have 3 minutes left until this closes. And so I'm not going to be trading the 5 minute time frame here. That's not the goal. I tend to look at the overall trend. Are we getting a breakdown? Where did we see support? Okay, interesting, right? Support, failure to break for new local highs, break below the range support. You could argue that is a resistance. So even back here, you might have, I don't know why it always does that. Um, you might have actually known, hey, not a bad time to short. You use a little bit of volume. Interesting. The volume failed to really drive the price back into this range, even when it was above the third standard of deviation. 6 million couldn't push the price. This simply leads me to believe that the bears are way stronger, far more in control. Very small little candle with big volume in a downtrend. Okay, so let's just play it out. And it continues trending to the downside. And it's actually quite nice because once you get to the point where we're, let's say, on that live, and notice how we had a massive explosion of sell volume right here. People got liquidated probably for setting a stop loss right there. People are trading that 5 minute. People are trading the minute. Let's just let it fly till present. We have 1 minute and 52 seconds left. And so, me personally, it's like, okay, trend is down. Where do we see some range support? Are you going to be trading short? Are you going to be trading long? If you're long, you're trading probably against this current little trend. Again, basics, common, like the four horsemen of technical analysis, right? Which are the trend is your friend, right? Watch the trend. A downtrend is a series of lower lows and lower highs. An uptrend is a series of higher highs and higher lows. In other words, up equals HH, higher highs, and then HL, higher lows. Downtrend equals LL, or excuse me, LH and LL. Okay, so I know it's kind of probably confusing. When I put it on a chart, it's easier to read and see. And if you have to, write it down and put it in front of you when you're looking at charts, because then you'll start to like recognize these things, right? You're like, oh, that is a downtrend. And you just look at a chart and you already know, like, this isn't something I should buy or long, or I should wait until the trend, directionally changes. Um, so I don't really ever counter trend trade. Unless like, there's certain variables and factors, and as you get better, maybe you can shoot from certain spots. But like pros become pros because they do a few things really well consistently, right? And so why make it harder on yourself by trading against the trend? So I'm not saying you can't. I'm saying that it kind of just adds risk. That said, if I were gonna short this thing, maybe up into this range, wait, or just wait for a breakdown at 102. Right, and watch it, set an alert. So, in 2 seconds, this thing closes, and it is a bullish inside candle. Volume has been pretty weak overall. So, me personally, this isn't something I take a position on yet. I'd probably wait till we get into this range up here or back down here for a breakdown. So horizontal supports and resistances are another one. Okay, so we got the trend is your friend, horizontal supports and resistances. Notice I just said inside candle, right? Price action, just understanding what a candlestick is. What makes one better than the other, or not even better, bullish over the other, or bearish more than the other. And then finally, volume, right? Which you can just find that's the only indicator that you would actually ever really need. And I actually read a really good post. Let me go ahead and pull it up on my other screen here if I can. Let me find that. And I actually am a huge fan of this philosophy because I found it to be true after my own study and practice with charts long enough. Peter Brandt posted something pretty cool. He said this. Let's double check. Perfect. Let me pull it up right here. As a career chartist who made my living trading into my sixth decade, here are things I disregard. And there are a lot of things. And I actually agree with probably 90+% of them. I haven't thought through some of them, okay? But I will say this. Watch, look at believing that CNBC or Bloomberg or any YouTuber has anything to offer me. Government reports create volatility, not meaningful direction. In other words, what does is kind of just the overall sentiment of the market. And when you have enough mass behind that move, the trend will continue. In other words, I'm actually of the opinion that there is no one market maker that can move a market in the opposite direction of the trend. It's usually a conglomerate of many participants who all move a market in that direction because that is the sentiment, which is really weird. I don't know. It's kind of like that beehive mentality. It's kind of like what comes first, the chicken or the egg. The market maker, this. It's like, well, if one market maker is enough to move the market to change the trend, then that simply means that the trend truly was done because there weren't enough people to push the price up. No one was buying anymore. So the only natural thing to do is sell, right? But he says this. Let's see here. Trend lines, day-to-day volume. Where was it? It was indicators. Indicators. So in other words, what he disregards, indicators. Weird, right? Isn't technical analysis a bunch of indicators? But this is almost always true for indicators. There's very few indicators that are not this is not true for. These are derivatives of price. In other words, it's kind of like if you're trading, imagine you're like trading Bitcoin on, with perpetual futures. You're trading a contract. You don't technically own Bitcoin or hold it. Okay, you're being charged a fee to trade in that market with leverage, right? And so that is a derivative of Bitcoin. It's showing you the Bitcoin price, but you don't technically own Bitcoin. So it's no different than indicators. Indicators are not actually the price. They are a derivative of the price, which means you're getting second rate. And more often than not, most indicators are lagging and a complete waste of time. And I'm not saying they all are. They can give you signals. And if enough indicators are pointing in one direction and the price is also in that direction, guess what you should probably do? Heed the indicators. But that requires discernment and practice, right? It's not like I just take one indicator. I can't tell you the amount of new people, including myself when I started, would do this. Like, here, let me lower that. Let me pull up RSI. Let's come into here. Let's go to like that 1 hour time frame. And more often than not, in this perfect example, let's say the price was right here. RSI, does anyone, most people should know how this tool kind of works, right? You have the upper band, which is 70. You have the lower band, which is 30. You have the mid band, which is 50. And anything here is about natural to the last X amount of periods. So in this case, click the settings, you're on a 14 period RSI. When I say period, it's because I am on an hourly time frame. So 14 hours of Bitcoin data. Okay. If I go to the daily time frame, this is now 14 days of data. So at this moment in time, from to where I replayed, Bitcoin is at a 43 rating. And what day? November 9th. Okay, so it is at a 43 rating, which means it's weaker than it is, excuse me, it's currently weaker than it has been over the last 14 days. Okay, if I go to the hourly, And this is where you have to get comfortable bouncing around through different time frames. And when you practice anything, you're going to start to understand it over time. It's like when you see a big old math problem for the first time, it's scary. It's a lot. Well, it's confusing. I don't understand it. You have someone come and train you and teach you a little bit. And then, except for some of you, probably just math geniuses. For me, I remember the first time things really started clicking for algebra. And like I was in like the eighth grade and I was like, oh, I get it, right? And now I see it because I practiced it. I couldn't have done that if I didn't practice it and mess around with those equations. In the same manner, this is the chart. Look, so on the hourly time frame, right, Bitcoin looks to be what you call overbought. And in this case down here, it looks like it's oversold. Okay, here it's average to the last 14 hours. So this is the midline average. This is overbought. Now, the reason I don't love indicators as a direct signal, okay, because most people that are new would look at this and say, oh, look, it's overbought. I should sell now. So you're selling right here, which is not a bad, if you were in here, great. Most people aren't in at the perfect time every time. That's virtually impossible. Okay. Some people would look at this and say, I should short now though, because it's overbought. And so let's play it out for a second. Let's see what happens. Okay. Oh, look, I'm in the money right now. Very little, by the way. And then, oh, even better for me. Okay, interesting. And so this is where I actually take into consideration the price action more so. I'm betting with the trend. Notice how right here, okay, not only did we break above 1039, we broke above arguably this range resistance between, this is why I like the box tool, because it kind of helps me to like, okay, this is kind of a range of resistance. Once and twice we broke down here, right? We had our lowest low, a double bottom, a new higher low, and a breakout for a new high. This does look overbought, but why the hell am I selling it? If you use the RSI alone, you would sell that. When in reality, imagine I didn't even use that at all. What am I looking at? Break above, range resistance. We have, okay, break out to a new local high. So that's good. We have very few small little candles, probably low volume if I really looked at it. Well, let's not look at it for now. And look at what I see. A huge wick on the downside, bullish engulfing candle, massive wick to the upside for a new high, even though it's sold back off. That leads me to believe there's buyers up into this range here. Yes, there were profit takers, but it looks like the buyers are in control when you consider the trend, when you consider a breakout for a new high, when you consider this bullish inside bullish engulfing candle, when you look at how this wick was bought up really strongly and then another strong wick for 105. Yet this would tell you, oh, look, overbought. I should sell. You should not sell that. This is why most indicators, and the reason is, and the reason that this is a derivative of the price is because it's lagging. It needs 14 periods of data in the past in order to spit out this right here. So I'm essentially using the past to try to predict the future. The problem with charting and technical analysis is you'll never know the future. Charts aren't there to help you predict the future. Okay, that's not what charts are for. Um, in my opinion, the only thing that is real is what is currently happening with the price. And so I think he states it best as well. And it's interesting because what he's sharing is not his own idea either. He's had enough experience that like he believes it now. But a lot of these things, like I've learned them through the same books that he's probably read from all these older guys who came before him with Dow theory and, Nicholas Darvis and, Jesse Livermore. Market Wizards is another great book. Like, these are like they're all kind of battle tested things that, in my opinion, the best of the best literally can look at a chart and just like, okay, I get it. I don't need a million indicators. Every now and then, every trader has one or two that they add to the chart, usually like an EMA. But even an EMA, what is it? It's the exact same thing as an RSI, just a different calculation. It's spitting out an average of the last 14 periods, 20 periods, 10 periods. So me personally, like I'll use a 10 and 20 EMA to kind of make things simple for like viewers or people. But when you're good, you don't technically need them unless you're on a long-term time frame. And then it kind of helps you to realize where does the majority of people think that if we hit break down, we have a 200 EMA. Oh, that's where it is. Okay, great. So that's an area of what I would look for as confluence, maybe an area of support, maybe just a high interest area. If that also aligns where the volume is traded a lot in the past, even better. And so you learn this stuff over time. But I think if you really want to get good on charts, ignore indicators. Just literally look at the price action, okay? Look at the trend, horizontal supports and resistances, not trend lines. Notice how he even says trend lines here. Interesting. I've trained no trend lines, right? Like, unless it's extremely long term. And even then, right? Some of y'all are probably doing it on a normal chart versus a log or log and not normal. Like, there's so many ways in which you can mess this up where you immediately think, oh, see, it's got to hold there, but it won't. Oh, it's oversold on this time frame. It's got to hold there. It doesn't. And more often than not, I think this remains true in markets. And this has kind of been my philosophy now as I've found it to be true in my, again, my own experiences in trading, is that the markets can remain irrational longer than you can remain solvent. Okay. So it's one of these things, and that's a quote. I can't remember who said it. One of y'all can look it up, toss it in the chat. But markets can remain irrational longer than you can remain solvent. So this said, notice how right here, new high, okay, and now we're just going to play it out again. Look at the size of that guy. Should you have bought or sold here? RSI told you to sell, technically. Now, some people are like, well, then I'm just going to use divergences and bullish convergences or whatever. Like, listen, guys, even those fail all the time. And I'm not saying that you can't get good at using it. If that's really a strategy of yours and you really want to do that, there are ways to succeed with any one tool. Now, really quickly, if you're enjoying this video and learning, and do you want to join our next live technical analysis call, get your questions answered, learn how to use indicators, understand what's a good crypto versus a bad crypto according to the chart, and even how to do a bit of research into those cryptos from a fundamental standpoint, then be sure to check out altcoinpro.com to join any one of our calls. We have tons of live calls every single week, Monday through Thursday. We have a classroom that we're consistently updating with some of the best courses in all of crypto. We have a constantly expanding library of posts and analysis from our DeFi researchers, which are pros in the space and have worked in the venture capital side, in the DeFi side, from a technology side. And some of these guides includes how to start in crypto, how to master DeFi, how to take advantage of different DeFi wallets and build out your portfolio, when to buy, when to sell, how to take advantage of the next big narrative so you can find that 10 to 100x altcoin early, and the list goes on. We teach you in 15 minutes once per week how you can take advantage of yield farms that'll earn you between 18 to 16% APY using your USD tokens. And although much of this might feel confusing, that's the goal, to help simplify it for you so you can succeed in crypto in just about 15 to 30 minutes per week. And if you don't believe me, go ahead and check out some of our testimonials on Trustpilot. Check out our testimonials inside of that video that's on the starting screen at Altcoin Pro. Check out our testimonials that we've screenshotted for you right here. Heck, even reach out to some of our community members and ask them just how much they enjoy being a member here, to the point where the majority of them have stuck around, and we have the highest retention in this entire platform on School, because we actually help people make more money on average than they spend to be here. So go ahead and check out altcoinpro.com. You can find the link in the description of the bio below, and let's get back into the video. Again, that's you can do that, and I found that to be true. But I think if you want to be good and you want to arguably become great in markets or technical analysis, or feel total confidence when you look at a chart, and even then, when I say confidence, I'll put it this way: I hold strong conviction loosely. So, like, when I enter a trade like this, I need to be convicted that this is the right thing to do. I can't always be 1 foot in, 1 foot out, 24/7. Like, you need it, and this is something that I'm still working on. But you need to be convicted that this is the right move here. But you need to hold it loosely enough that you don't need to be right. Like, you're okay losing here as well and saying it wasn't the right play. So what did I learn? How do I approach it next time? Are we in a very choppy market? Like this last 3 months with Bitcoin just ranging and doing the broadening top, that's a very choppy market, extremely difficult to trade, because you're getting stopped out on all sides. So at that point, it's like, well, then you have to step back and say, well, where are we at right now? What's going on right now? Like, Every time we break for a new high, we immediately break back down, but the trend is up. Well, one day it won't be. Okay. And so it's like, how do I approach a market like that? How about this? I don't take bigger risks. What if I minimize the risk I take, or the normal position size I would take here, I now scale back on because the trades that I'm currently taking aren't working. So I still held conviction moving into a play, whether it was long or short, but I have to be like, sometimes you're trading against the trend. You're like, wait, what am I doing here? Why am I, it's like when you're trading, what I found also really, really works is when you're trading really well, you should scale up. Like you should actually, the market is rewarding you for making the right decisions. So like you should scale up and add to those positions. Or if you were normally taking a 10% play, maybe take a 20% play. If the market's rewarding you and you're on the right side of the market, go for it. Like step on the gas. And again, this is what I've learned from people that are far better than me. So I'm just spitting out things that I've learned from other people. Um, when things aren't working out for you, you should really scale back and potentially just sit on your hands and then make a few really small plays to kind of just get your confidence back up because the markets can really humble you, right? And many of us have already been humbled. So, like, that's probably why you're here because you're willing to listen to some random kid like me. Yeah, like that's so in this case, right? Like you would have been right. Market's trending up. Using this, you would have been wrong. And let's just play it a little bit longer. I don't know how far it goes or where it goes to. But you can see we had now a new higher high on the RSI. Oh, now I should sell. Well, I don't know. If I'm on the right side of the trend, I don't want to sell the first little profit I take. Why take small profits when you could take bigger profits? Right? Which really comes down to fear. When you like start taking really small profits, this is I think poor thinking. You can never lose money if you always take profit. You're not wrong, but like how many 1% plays do I need to do to really actually make anything out of the market versus having conviction, sticking with the trend, and then maybe re-entering if it dumped back down to 104 because I already entered here. I'm at virtually no loss unless it starts to break back below here and I have a stop loss at 103. Okay, so I didn't make money over the week in this play or whatever, and over the last 5 hours. Who cares? Right? Like, what you should care about is taking small losses and then having the courage to let your winners ride. Like really let your winners ride. When you're right and the market like I add to a position like that. I don't get out anymore because I don't like making small profits. And by the way, you have to also understand more often than not, you're going to make a lot of no money trades. And that's okay. You don't need a high win percentage. You just need really big wins to off three big wins in a year, guy. Like I'm telling you, three big wins in a year can change your life. You don't need 1 to 2, small plays every single day to feel good about yourself. And if that's you, maybe you should do the 5 minute chart day trading. Like there's different strategies. The market's very dynamic, but the more you trade on average, just understand the more likely it is, especially if you're newer, you will be blowing accounts pretty consistently until you understand yourself, you understand that market. You can do it with, 1 to 2 cryptos because those are ones that are typically liquid, usually Bitcoin, Ethereum. Um, so anywho, that's kind of where we're at on the philosophy of this. But notice like right here, big old bullish engulfing candle, bearish inside candle. But even with the bearish candle, look at this. Look how beautiful. New higher high. Yes, it was John Maynard Keynes. Thank you for sharing that. Markets can remain irrational longer than you can remain solvent. Wasn't he like an economist? There's so few good ones, which is so funny. Another Peter Brandt again, and maybe it's not an ism. He literally stated it. He's like, where was it? Let me add this person. I thought he stated it. Oh, thinking that economists know anything useful. And it was really interesting. I was watching a video of, and then we'll get back to the charts and kind of what's going on. I think this is really important and valuable. Oh, and by the way, the reason I state this is because I was trying to show you in the beginning. If you right click right here, you make sure that you scroll to labels. So right click over price, scroll to labels, and make sure that you have the countdown to bar close. Okay, having that on just helps you to know when that bar closes so you can trade into that next step. So if this thing closed, now the reason it's not there is because I'm doing a replay, so it's paused here. Okay, but if we go to the live chart, you'll see it. Um, but I was watching a video of, and I think many of you probably seen this. Warren Buffett, right, famously had a partner, Charlie Munger. And there's, what his wisdom was truly great when it came to markets. Like he had these Mungerisms. And one of them really came down to his experience around businesses, investing in businesses, and incentives. And so we have to think about the incentives of, well, I'll give you the example of Warren Buffett not long ago. I don't know how long ago this was, probably in the last decade. He's like, I could fix the government deficit in, 2 minutes flat. He's like, how? What are you talking about? No one can solve it. And he's like, just make it so that all sitting senators or anyone in Congress is not eligible for re-election if the deficit exceeds 3%. You can bet your butt they're going to figure it out because they all want to go back in for re-election. That is going to be the highest priority for them. And if they make it a priority, we're no longer going to have deficits to that degree. But there is no incentive for them to stop printing dollars because they can always get more done because we are the global powerhouse. The US dollar has dominance, blah, 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 blah. Okay? And their incentive is ultimately to stay in power and become more powerful because most of the people that have power in government shouldn't have it because they want it, right? That said, the reason I guess I'm getting back to this point is we're talking incentives with economists. Why doesn't Peter Brandt listen to economists? Because most economists don't actually have the incentive to succeed in markets. They don't have to make the right call. They don't get rewarded or under rewarded by markets. They just have to sound smart and put out really good theories. Companies hire them to help them make decisions because they all live in academia and our company's successful and important and we need an economist. But I can assure you, okay, the reason Warren Buffett's company is so successful investing is because they don't listen to economists. Think about that. They are the economist and the economy is the market. Right. And that's not actually 100% true. But I'll put it this way for us right now on this call. Okay. I don't think about the economy as much. The market is the ultimate purveyor of what's going on. So to me, I don't need to have a really grand theory and then explain down to the 10th degree what happens here or the higher end portion of trickle down economics and all these different economic theories, right? Like Paul Kruger, which is a total idiot. I can't believe I share the same name as him. What I will say is this, like these people don't have an incentive. They don't have real skin in the game. And even then, think about it for 2 seconds, truly. Most of them don't even invest their own money in their theories. They're investing other people's money in it if they are involved. Where's the incentive? They have none. So they don't need to be right. They just love the publicity. They love feeling smart. They love having the PhD. And I'm not going to talk crap on everyone. Some of them are really good. But there was an old stat that even Tony Robbins shared in his book, Money Master the Game, and how he talks about how more than 40% of mutual fund managers don't even invest in their own funds. So they're investing other people's money. If you ever were like giving someone that's like shows you track record and results, they always it's sales. Hey, invest in our mutual fund and here are the fees. Question, do you have your own money in it? And if they don't, run. Run. Because they don't have an incentive to not lose your money. And ultimately, they still get rich on your fees. And they have another really good excuse as to why you just need to stick with them for this year. So me personally, like I run from all that. And I found that arguably, everyone on this call should not need to have another fund manager unless you're managing a lot of wealth, like you have different diversified, portfolios and whatever. But from the perspective of crypto and trading and having, access to your own capital, you'll never need to look at another economic headline again. You can use those to test the market. So if I'm looking at the charts, and again, they're always secondary. Let's just say really positive chart, crazy bad headline. And the bad headline is so bad that markets sell off, but the sell off is very small. Volume is not crazy. Or even if it was, but it gets bought up really quickly. Strong bounce. What does that tell you? What the news headline is actually telling me is this. The trend is right. I shouldn't be afraid. I should be using this as a dip buying opportunity because the market is showing me strength, deep underlying strength in the face of a very bad headline. That's the only time I use news. More often than not, I ignore all of it. And honestly, I'd probably even be better if I completely never looked at news. The problem is, right, it's hard to make videos and, be educated on what's going on in the market, if I truly only lived in the charts. But I think I'd probably even do better. So that said, let's dive into, I hope that was a good lesson. No, I didn't know you could save replays. That's crazy. Oh, that's cool. That's a new feature. Anyways, do we have any questions on anything that I shared there before we move on into just looking at the chart here? Let's remove that drawing. Let's remove this. Okay, cool. No questions in there. Got a lot of people on. Very good sking. I don't know what that's. What's sking? I think you meant something else. Okay, looking at Bitcoin now. Let's go to daily time frame. We have 23 hours left in this period. So, candle closed bearish engulfing. So, let's go to the 4 hour actually. Okay. We rallied off some lows right here. So, we know that right now, for whatever reason, at least on Kraken with very little volume. So, when you get this little volume, markets are kind of just asleep right now. Okay, and this is obviously Kraken. It's a big enough exchange, but maybe let's go to Coinbase and see where we're at, okay? So this is why it's important to also bounce around between different exchanges. And you can see on Coinbase, we have 142. So Coinbase is winning the game when it comes to volume, okay, and their fees and all that jazz. But very similar chart. Notice their lows are 98. But again, I'm just going to focus on kind of where we closed on the candles, and it's basically the same. About $100,000 seems to be the range support, down to about 99, 98. Okay. We had a range resistance right here. And you know what? Sometimes you can trade just this, but if you really want a better picture, just keep dragging back and just see, is there anywhere else in the past where that acted like a support or a resistance? And sometimes it works out, other times it doesn't. You can see pretty close, right? A lot of chop and volatility here, so ish. But where it really mattered actually was this bounce right here on October 17th. Dumped right down to 104, okay? Then supported, rallied for a double top where Peter did call the 114, 115 range, just according to technical analysis looking at a soybean chart. Broke down below the range support, which is now a resistance. In other words, what are we looking at right here? With this breakdown and close now below the range. What is that called? Anyone want any takers in the chat? And again, this is what I call it. It doesn't you could call it nothing if you want to. What I call it is a bull trap. Exactly. Bull trap. Armin, we can cover a cup and handle for you if that was your answer. But no, this is not a cup and handle. This is just straight up bull trap, right? Um, so that said, why? Because this looks to be a range support, which acted as resistance once and twice, rally back above to potentially get any new takers to enter the market. Okay, so people that want to buy Bitcoin were like, oh, look, rally, without thinking about where's the trend. Okay, and the trend is currently down. So now we have a bull trap and a close from the daily time frame back below with a bearish engulfing candle. So normally, if this was like a bullish trend, let me remove those drawings. If this was a bullish trend here and I saw this candle, I'd be more prone to maybe watch this candle and see does it come back into 105, 106 or close right up here again because this wick doesn't look bad. But when you're in a bearish trend and a bearish engulfing candle, I worry less about this wick and I focus more on where's support and resistance, right? And so looking back here, this seems to be it. So the fact that we came well above it to get anyone to take that trade before breaking right back down below the range support, which is now a resistance, leads me to believe we're going lower. just from a daily time frame. From that weekly time frame, what do we have here? Pretty nasty little breakdown. And if I look at the volume, volume is pretty high right here at the top where we saw resistance. A lot of profit taking. I could cover outflows, inflows, ETFs, but maybe not for this call. I'm seeing an expansion of volume as the price is breaking down. So from these ranges right here where it's kind of boring, I don't worry about these guys. I worry more about the big ones. Okay. Notice expansion of volume. Okay, now trading down a little bit, it could continue trending down a bit, and then you might see another expansion of volume in the direction of what? The trend. How do we know this is a downtrend now? Okay, well, one, we were resisted once, twice, three, four times for 4 straight weeks, resisted at 123. That's it. Where was our range support? Here. Do you see that? 1 week, 2 weeks, almost three, 3, 4, 5, 6, 7. Okay, I don't need to cover an EMA right now, SMA, all that stuff. Just want to focus on the price action. Look at this. Week, cool. Okay, not bad. Not bad. Breakdown. Yikes. Okay, this was our low of this entire range. This could have been like a nasty little, bear trap. And what was this? Yeah, this was the week of October 10th or the day, this happened on that day. I'm looking at the weekly time frame. Let's go to the 3-day time frame and see it. Okay. That breakdown. Let me remove that drawing. And so this is a nasty dump, but then we were supported and came right back into 116. So this could have been like, okay, let's liquidate as many people as possible before that next move up. The problem is then we got a deeper sell-off and an expansion of volume. Even though right now we're not expanding, we are now in new low territory, seeing resistance over the last 3 days, which just closed. Think about that. Resistance here inside candle. Looking at the daily time frame, we got more confirmation that this is likely a bull trap, range resistance. So to me, I'm trading with the trend, not because I want to be bearish Bitcoin. Like I get away from that idea, guys. Like I really want to drill it into your brain. You don't need to be bearish or bullish. Just be on the right side of the market. Okay? Um, this is bearish, period. The question is, can we get back above? And so really from a weekly perspective, I will pull this up. Cool. This is the only thing I'm really kind of waiting on. Can we hold? We've done it a few times. My true worry is that it is far later stage. And let's look at the stock market, right? Let's see. Doesn't look terrible, but everyone that I know that trades the market this way, they're like, we're mostly out. So hard, it's a hard read on a weekly. Daily doesn't look good with the exhaustion gap filled right back below. Rally back to here, 623, at least on the QQQ, NASDAQ. Um, I'm willing to bet we see some resistance here, maybe rally to 630 this week and probably continue breaking down. My personal opinion. This looks more like and here's why. Okay, look at deep exhaustion, excuse me, exhaustion gap, close or fill the gap. Look at this rally, right? Really deep dump, cool looking candle, huge gap right back to the upside. When you see this type of volatility, it's better to see price action that looks more like this. You see how different this looks here? This is literally like extreme volatility, bulls and bears fighting for the end of like that last piece of meat. That's what that feels like and looks like to me. So from a weekly time frame, it doesn't look that bad. From the daily, you're getting a better picture, right? And here's why. I'm also noticing on that dump with that one day where you got a lot of volume that stepped in, notice the retrace is actually not continuing to grow in volume. It's actually declining in volume. So I don't like the decline in volume into this area. Me personally, if I was going to buy the stock market or just the Nasdaq, I'd probably buy it back into all-time highs or strength. And when it breaks out, it does break out pretty hard. You see back here, rallied pretty hard. You would have made some money, right? Right here, you would have made some money. But the longer these things go on, just throwing it out there, the higher the risk is in that third, fourth, fifth breakout for new highs. Your risk continues to increase as you hit new highs, which is why this late stage in the bull market, me personally, my gut is telling me, and again, you can't, build a gut just by looking at a chart. You do it by practicing and being in the markets long enough and looking at charts long enough and experiencing losses. Tells me that we are later stage and that this has got to hold, guys. Like we got to get back above realistically, stay above this 40 EMA, but it's starting to flatten out, or SMA, I should say, and realistically get back above bare bones minimum 105 this upcoming week. We have about 5 days for this thing to close better. If it closes down here, I'd be far more prone to be even more bearish. I'd be about 90% bearish. And let's say that the week after, for whatever reason, all this money flows in and it breaks right back up to 108, 109, hangs out there. Guess what? I'm changing with the market. I'm officially a bull now. Okay? That's the reality. But where we're at in the market leads me to believe I need to be more of a bear. So now with that perspective, what do we do with all the other charts, right? Same thing. And notice like Ethereum rolling over. Notice how Bitcoin, look at the difference with the EMA. If you just use an SMA even as just your straight up trend with no chart, does it look like it's going up or down? Up. We have slight little bumps, right? And I can put it on daily, it's the same thing. Slight little bumps in how it moves, but generally speaking, up. What you need to start to worry about is when it flattens out or rolls over, because then you're later stage. And so in similar fashion, right? Okay, not bad, right? Wait, why? Am I on a replay? It shouldn't be 30,000. Am I wrong? Yeah, see, look at it's at 30. Oh, duh. I'm looking at the SMA. I was thinking like the price isn't 30,000. I'm silly. So then it's like, okay, and by the way, notice how it's staying the same. The reason is just for those of you guys who want to know, if I have a 40 on here, right, and I bounce between 4 hours, this is no longer 44 hours because look, I made sure that I keep the time frame flat at 1 week. So you can actually do that, or you can just do the chart. The chart is going to give me a different look. Watch. Do you see that? Because I'm on the 4 hour time frame, 44 hours, right? Whereas not 44, actually 44 hour periods. Um, but you can also just make it so it's always the same on all the charts, and it doesn't matter what time frame you hop through. So that's kind of helpful. But you'll notice, and this is the point, look, trend was up, started flatlining. Now, here, I'm willing to bet the price pumped hard and then dumped hard. You have a lot of volatility close to tops, which is why I'm a little nervous with the NASDAQ looking the way it does. And then the price action and the trend down on Bitcoin. What do you start to see here? What's going on with my computer? Can you guys hear me and see me? Okay, cool. Sometimes it does that. I think it's just high bandwidth on the internet with everything that's going on. So look at starting to flatten out here. Slight rally, and then look at the trend. By here, I'm willing to bet the price is somewhere in here. Let's turn it back on and look at all of that. Right? Interesting. Price here. Look at where it was here. So it doesn't matter the time frame. When you start to see these things flatten out like this, right? It's time and then trend down and then rallies can't hold. This should hold and continue trending to the upside. When the rally can't be sustained and now you're back below a range, what used to be a resistance, that hopefully should have become a support. Saw resistance once and twice, break down for a new low. I'm willing to bet this thing starts to trend back down. And I'm willing to bet Ethereum, even if it sees support at 27, like just, by the way, I'd probably be a dip buyer somewhere between 23 to like 26 just for fun, but I wouldn't add a ton of risk. And it's like I think if Bitcoin continues to break down, this thing is going to break down pretty hard. Uh, Solana, same situation, right? Failed to hold 190 right here, back below, flat on the SMA, just the trend without looking at the trend, by the way, of that. You still look at the price action and say, if we're to break down, where are we going? Likely 128. XRP, right? Really good market makers. I think it rallied harder than everything else with that ETF news and government shutdown not being on the table anymore. But this is a lot of overhead resistance into a bearish trend with Bitcoin. So even if it came back up to 265, what do we have here? A downtrend. And we've had lower low closes. This is trading very much like Bitcoin right now and holding up slightly better, but it has a lot of overhead resistance. So this isn't something I'd add risk to, but better market makers on XRP so far. So that's good. And when I say market makers, it means that they're trading it well enough to where they're not selling everything, or if there's a lot of, let's say, retailers that are selling, they're buying those dips pretty well in order to stabilize the market. Because if the bottom falls out from something like this, it creates for a major event where, I'll put it this way, if you're Ripple as a company and you are borrowing against that XRP in the escrow, which is what they do, um, you wouldn't want the price of XRP to crash because that's collateral, right? And so the value of your collateral goes down. And I'm not saying they would be liquidated. They're a very successful business, but it looks really bad. So for them, it's wise to pay, I kid you not, some of the best market makers in the crypto space to really make sure the price of XRP looks good or at least is supported. And it can trade with the market. Market's up, it's going to go up. Market's down, it's going to go down. Every now and then you'll get, just everyone in retail in and, market makers double down on that and it really pumps and flies. But generally speaking, like you don't want the price of this thing to collapse. And that would be very bad for Ripple and just the look of their company as they're expanding right now. So again, I think if you were a savvy investor, buying, Ripple stock is probably a better play at this stage than buying XRP right now. And then when we bottom out on an XRP, right, probably rotating from a Ripple back into an XRP. But that remains to be seen and how long that's going to take. How long will this bear market last? I have no clue. Um, so let me answer a few questions. We're at 5 o'clock. If anyone has questions about the charts, about any cryptos that aren't ridiculous, and if it sounds ridiculous, and I've told you kind of what I believe is going to happen with the market over the upcoming, let's say week or two, trend is down, and you're in a like higher risk crypto, which is a lower market cap, do your homework, like make your decision. Probably not wise. Like everything is going to dump 90% against Bitcoin no matter what over the long run. And so, in bear markets, I've seen some of the best narratives and cryptos in an environment where everyone truly thought all cryptos were going to crush it and everyone's going to be a multi millionaire. Get absolutely slaughtered holding bags into a bear market. And if they would have just held and accumulated just one asset, Bitcoin, they would have been insanely better off right now. But now they have to start over, right? It's happened to me, guys. Like even in the Polkadot parachain auctions, like they had this really cool idea and it really could have worked, right? But the market wasn't ready, and ultimately maybe that's what made it a bad idea. I don't know. What I'll say is they had a really cool deal where I tossed like 30 grand into this deal and I just let it sit. It was going to be locked up for 2 years and I get access to all these airdrops and tokens from different companies that were going to launch on the Polkadot, in the Polkadot ecosystem on that blockchain. I should have seen the writing on the wall. It was just hard to use. You had to be very technical. My money was locked up for 2 years. Polkadot dumped to nothing, right? And I came back out with it, and I think I sold all of that Polkadot for like 3, 4 grand. So I lost like 90% on Polkadot. And Polkadot was one of the biggest companies at the time, truly, like invested in by major venture capital. They had, I can't remember what the developer's name is anymore. One of the OG Ethereum developers, like everything going for it, down 90%, right? All the tokens that I got airdrops, nothing. They're worth nothing. So, and it's like I made 30 grand, lost 30 grand, lost way more, made you live and you learn and you begin to realize that like carrying risk or locking and staking to the point where in it, let's say 2 weeks from now, if the bottom fell out of the market and you can't pull out, that is not smart. Happened to all of us, bro. Like all of us back in the day where no one thought crypto could be touched. And one day, it's funny, it's going to be a completely different asset or market. And there'll be kids when I'm 50, 60, like trading some random new thing, and I will know better. You guys will know better, right? So you're gonna be sitting here like, oh, I won't be around when he's 60. I hope you will be. But let's see here. Um, we'll look at SUI, we'll look at Quant. The most important thing that you could ever have in markets, I mean, there's a lot, but is truly liquid assets, like having it liquid. If I need to sell, can I sell now? That's liquid. If I need to buy, can I buy now? NFTs are not liquid. I'm waiting for someone to buy. And then if market dumps, no one's buying. Now I'm screwed and holding an asset I literally can't get someone to buy. That's not liquid. It's stuck, right? Liquidity, and now that you think about it that way, imagine you're an institutional guy with way more of an asset and you just saw what happened on October 10th. You think you want to touch crypto right now? It's not liquid. And if I buy $1 billion, not only is it moving way up, people are selling into that into a downtrend, so I wouldn't do that. And I'm pushing the price up, which means I get filled over here when I wanted to buy here. I'm experiencing major slippage. It's not liquid. So this is why people still, institutions are probably only going to trade Bitcoin and Ethereum and maybe, the top three, four max, but they're not trading it with the real size they would in a traditional financial market because they can't. It's not liquid. Um, yeah, Brian, good thing to say. Never buy paper crypto, which is a lot of just derivatives, right? Don't buy IOUs. Buy the actual asset, the spot asset. In the case of Bitcoin, buy it spot from a Kraken, a Coinbase, or any trusted major exchange in the United States. If you're in another country on a Binance, you're probably fine. But like buy it, and if you have to, remove it from that exchange onto your own hard drive, Trezor, Ledger, whatever, and sit on that. Okay, and if it's anything past 250K, I should say, right? Because you're at least maybe not on a Binance. Like I wouldn't keep it on Binance, but like I'm on US exchanges, so I'm pretty much guaranteed, the same way I would be at FDIC. So up to a certain point, and even then, right? We had the collapse of FTX. Difference was, well, there is no difference. I don't think Coinbase is going anywhere. Like I really, if that happened, crypto's done. Crypto is done. So, and not Bitcoin itself, but you lose all your Bitcoin anyways. And Coinbase is too big. I'll put it this way: they're systemically important enough for crypto that I wouldn't say they're too big to fail, but I think our government would actually bail them out and pay people back their money for their Bitcoin and stuff. Um, because they're very pro crypto. We've seen a lot of that. And arguably, if Bitcoin fails, I'll put it this way, stable coins are likely not going to be used as much or are going to have a hard time getting back to a place where they're trusted, which means then US treasuries and the dollar are cooked. So and stablecoin issuers will be the largest holders of US treasuries. So if I want to save the dollar, I actually need to save crypto. And that's kind of like my bull case scenario for crypto. Um, I really believe that. And could we have those types of events? Of course, anything can happen. But that would be a fire sale on Bitcoin, which means what's the best thing you can do? Just buy Bitcoin, remove it from the exchange. Be very cautious of how you do it. Be smart, and you should be good to go. Okay, let's look at Quant and Sui real quick. So I will do this list because I think Quant is a here. Where that's why. I'm looking at a different list. I clicked the list and didn't think about it. Sui. I really want this thing to do well, but it's struggling. Struggle to hold the trend. Super liquid, right? Look, 340 down to 51 cents in a day. Even some of the best products, and true, I've seen this, guys. Like, you could use a trend line here. The ones that were the best of last cycle, this is a log chart, by the way. Either way, if I didn't even use that, Trend is strong to the downside, $2. Who says this thing can't be another $1.40 down to $1? And it's already showing relative weakness compared to, let's just use Bitcoin. I don't even need to use anything else. Let's look at Bitcoin. 4 hours, right click. So you got to do a percentage scale. Off of Bitcoin's high right here. So try to get it aligned. Bitcoin is down 17%. That's a lot for anything. 44%. It's just dumping harder. Less liquid. Less demand. So less support institutionally. Less strong hands. Potentially more sellers because of they actually have token unlocks. Like this is where tokenomics kind of matters, especially in bear markets. Not in bulls, in bears. I love tokenomics like Sui's oh, not CoinGlass. I love tokenomics like Sui's in bull markets. I don't love it in bears. So Sui was like the 12th, 13th here not long ago. Now back to 19th, 7.4 billion. Let's look at the market cap high. Was about 14 billion, so about half of that now. Makes sense. And um, let's look. The circulating supply is literally 3.6 billion out of 10. I'm willing to bet token unlocks, and they'll show it on their site or whatever. You can see the ladders. So they just unlocked. Doing the math here, you really have to like zoom into this thing. Maybe go to the year. Cool. You'd have to look at the Series A, Series B, community, blah, blah, blah. But right here, so 3.62 to 3.68. We're about midway through. There's going to be, and by the way, it doesn't mean they all sold on the unlock. It means they sell throughout this period in order to not collapse the price. All that selling matters. Okay, now right here on November 23rd, okay, it'll be about the same. And you see another little jump on November 30th to 3.73. In other words, another 0.05 billion. So how many tokens is that? Do the math at $2. Who's buying all of that to keep the price flat in a bearish market where you also have the added effect of derivatives and day traders and futures selling into that market, pushing the price down because there's profit in it. It's such an uphill battle for products like this. Launching tokens before you reach real revenues and adoptions is the dumbest thing, yet they have to do it because there was no regulatory way around it. Like you couldn't just like launch in the United States in the stock market. Blockchain, you could have a blockchain technology as a stock company launch in the United States market. The problem is this last administration was so they hated blockchain and crypto. Who the hell with a lawsuit on Ripple was going to go and try to make a stock out of it? So instead, you don't raise through the public in the normal way and deal with all, you're going to get crushed. You just launch a token and that's how you raise your money. You could show and prove to these investors, Series A, B, early, seed, okay, that when we launch our token, we have really good marketing. We have, we're going to make this token. You get X amount of these tokens. You can sell those into the market. That is your profit. And so I will give you money for that now, right? And they do have a good team. They do have a good technology, but not enough. So timing matters when you launch. We used to invest in, we had friends who were VCs in the space. And Yoni was like on an accelerator for Atom. And so they would look for investments to use Atom's money to invest in crypto technologies and companies. And one of my friends, Jordan, who worked with him, who lives here, small world, Yoni's in Florida, and I knew him long before I knew Yoni and all this stuff. So kind of just connected through random mutual friends, is a really like knowledgeable, very intelligent person, especially in the crypto space from a technology standpoint. He knows the space. Would always get us deals into either seed or Series A rounds for a lot of these crypto companies. So before something launches, we get access to the seed prices, right? Like if they were going to launch a token, let's say on an exchange, and usually it would be smaller exchanges. If you got a Coinbase or a Binance that was big, because that's a lot of liquidity, they're going to support it. They're going to make a market for it. It costs a lot of money. You actually have to pay like a Binance to list on there. Like I don't know what it used to be, like $500,000 minimum to $1 million just to list your token on there. They've probably scaled that back considering there's less tokens launching now. But the point I'm trying to make is like we would invest in it as a pool. So, some friends would toss in 5K, some would toss in 20, some would toss in 2, and we get to enough where we're like, okay, we have our bare bones minimum 50K, 100K, 200K for this pool. And then we'd invest with a series of other group of other investors into these things. Then they'd give us the dates and timelines that was programmatic for our TGE, which is the moment the token actually launches. Here's when it's going to launch on average. They stopped doing that as much when they realized crypto is kind of cooked. But at the time, they would tell us this is when the token's going to launch. You're going to get this percentage of your tokens that you bought. Then over a series of, I can't remember what they called it. It was like a ladder, a cliff. There was a cliff. There was a ladder, and then you just get like what we just saw here, right? Where you get this amount of tokens every single X amount of time over 4 years. Sounds great in theory. The problem was by the time the token launched, if you were in a bear market, it wasn't worth anything anyway. So our literal capital was locked up. And so I would never do this again unless I was very serious about it. Like if I really wanted to succeed in that space as a venture capitalist, right? Very difficult to do. Almost everyone, especially later stage, didn't make money. In the early stages, we all made money. In the later stages, we never made money. It's funny how it's the same exact thing, just looking at a chart. Later stages, very hard to make money. Earlier stages, easier to make money. So let's look at Chainlink, and I'll do this last couple things. So we'll look at Chainlink quant and then just technical analysis. I'm willing to bet they look exactly the same, guys. Like I'm not even going to be shocked if I'm looking at like quant and Chainlink and it's like, ugh. This is why it's like hard to want to invest in anything else anymore, really. Okay, so we're in infrastructure quant right here. Let's get that weekly. I don't know what to think. This one's just like me personally. If this thing dumped back down to 55, throw a little bag at it. But it's literally right in the middle. Like I wouldn't touch it right now. If you're in it, understand that with where we're at in the trend, it could possibly break back down to 55. I wouldn't touch it until then. But even then, the more that it touches this range, the more likely it's prone to continue to break down. So right in here between 60 to like 55, maybe toss a little bag at it. If you're already in, you don't want to carry that risk, de-risk a little. And again, this isn't financial advice, just throwing out there what I would be doing. If it broke right back up to 136, great. I'd start to look at it more seriously with strength. And I couldn't care less if I got in at 55. Because how long is it going to take? We're talking opportunity costs here. And if it did break back to here, that's a signal of strength. And this thing could run easily back up to 430. Great. I made a lot of money. Like that's what I look at now. I no longer think about Quant is a great company with a great technology. Sui's great too. So what? Um, let's look at Chainlink and then we'll look at Zcash and call it good, okay? Um, and I have an interesting thing to share on Zcash. Nothing bad or anything, but slow mover, guys. Like this isn't terrible. The trend is kind of up, right? What I will say is this, Chainlink, because I really don't want to carry a slow mover right now in this environment, maybe play it with like, this little trend line here, call it good. If it breaks below here, just wait till maybe it comes back down to 10 bucks. And then that's where I would start to add between 12 to $10. If it comes and, breaks back to the upside, 26 bucks is a great time to buy. Keep it simple. Maybe look at one or two EMAs, look at some volume. But right now, at 15 bucks, I'm not interested. Uh, Say is even worse than Sui in terms of, and I'm sure if you're talking tokenomics, probably, but I don't have the time to look at that right now. And I just wanted to give you guys an example of the actual overhead pressure or resistance that a lot of these tokens are going to face, not just due to price action, also due to token unlocks. And those unlocks are going to continue to enter the space during a time where no one's supporting it. Uh, and that's the thing. You have to think about these investors. If they're average, some of them, they make some bad decisions on other plays. They lose money, lose money, lose money, lose money. And then, like, on one of these tokens, they made money. and because they got in at 50 cents and now it's $2. The problem is they by the end of the year they have to show something for it. So if they're at $2 and they're in profit, they're even though it's dumping, they don't care if it dumps more. They got to get out. They got to sell. Something to think about. So let's look at Zcash. I know Zcash. I don't even think I have it on this list. So we'll just look at it here. The one thing I like, okay, here I like what's happening with it. I think there's potentially an opportunity for a catch-up trade with what is it? XMR, right? Looks really good, cup and handle style. So there you are, Armin. There's your cup and handle. Do you see it? Cup, handle. Very long term. Is it possible that this is more than 50% sure? Is it textbook? No, but this is what I would call a cup and handle. Okay. That right there could be a catch-up trade. It's not dumping nearly as hard as everything else, which means there's not that many sellers or just more support and demand and buyers. Very slow mover though, week after week. So, but when it does, one day it's going to rally hard for crazy highs. And because of how long this is, it's going to look like gold. It'll be at $3,000. Everyone's gonna be like, "Oh my gosh." I kid you not. Like get mark my words, one day. How long? I don't know. Okay? I don't think about time frames as much as I think about price or targets to the downside or upside. So let's look at Zcash. So this is my worry. Extremely hard rally off the lows. I wish I was in here. I wasn't. I'm done chasing. And the reason is because we're very late stage. Just because it's showing relative strength. If this was showing really good strength in the bull market, I'd be more prone to buy it. Me personally, if I'm not, if you're in it, I would hold. Okay. Um, I should have bought here, but no one thinks about Zcash at the time, right? Really strong rally. I didn't even, it wasn't even on my radar. Um, it's funny, I didn't even have it in my Kraken list because it's such a dino token. This is what you call a dinosaur token. And now it's back up to its actual all-time high from 2018. But one thing I've learned, and so I'm not saying that it can't continue. I don't know. I don't care to be right. What I will say is this: my experience in markets in the later stages of crypto bull market, when like all of your leaders throughout the market are breaking down and your mothership Bitcoin is breaking down, wherever you see laggards, ones that didn't do anything the entire bull market. Look at this. Ready? Through 2022, dumping, 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 dumping into June 2024 or July 2024, it actually bottomed out. Everything else in the market had bottomed, at least the better ones, bottomed out December of 2022. By January of 2023, they were pumping, right? Into the summer, they were in good ranges that were healthy, coming closer to all-time highs. They started making all-time highs in 2024 and then again in 2025. Where was this guy in July 2024? Finally bottomed. Major laggard. So it's kind of like a sick and dying horse that's like it just got a shock of like testosterone and like all of these what's the one I'm forgetting right now? Adrenaline. It's like boom, wake, whoa. But like it only sustains it for so long. And then if everything continues to crash, the top might actually be in. So if you were to ask me like, is this thing gonna pump back up to 750? I actually think for this cycle, that could have actually been the top. Like I'm gonna call it right now. I think even though it's holding up well right now, if we get one more bad week on Bitcoin, this thing's actually probably gonna really struggle because it is a laggard. So it's really performed well, which means this is the problem. And this is where it's like a lot of people like, no, but it's doing really well. Like, why would I? So I would hold it, but maybe play it at like a 10 EMA right now. In this environment, I'd do a 10 EMA. So toss a 10 EMA on there. And here's the reality. Do you want to sell below 313? Where did you get in? Did you get in at 157? Awesome. That's still 2x, right? But if you got in at 255, now you have to be like, well, where am I willing to take a little bit of profit or any profit? I like to let my winners ride, which means I'd probably be pretty disciplined about 313 on a 10 EMA. Notice how it's probably holding above that at like a 7 EMA, which is crazy. So that means this thing's moved. You could do it on the weekly or better yet, even the daily. Look at this. Look how well it played that 10 EMA and now it's below. So up to you. But I'm gonna call it. I think the high was in for 750. So that's just me. Doesn't mean I'm right. If you've been in it and you're still in profit, you need a strategy for when you're gonna get out, especially if you're in good profit. That's my personal opinion. It's a laggard though. And that's not an opinion. It's just a fact. It's been a laggard. And it's a Dino token. Dino tokens always pump closer to the end of the phase of this market. They happened in 2021. And when we say Dino tokens, like one of the earliest, oldest tokens that did essentially nothing in 2021 when all the new stuff popped up. Because this was an old narrative, an old thing. It was around the first cycle, the first major cycle, right? 2017 to 2018. So okay, any final questions? Do you guys still do that stuff? I remember back in 2018, we used to get into the pre-market coins on a site. I forget. Yeah, there was a lot. You're talking like ICO stuff, the ICO craze. Yeah, man, there's the million and one ways to lose money, and there's very few ways to make it. Um, and it's awesome to hear you have experienced that as well, Brian. Thank you for losing money with me in those days. Um, I made money on quite a few of those, but it's funny. I always gave my gains back to the market. I didn't know enough. I didn't have I had to read all the books, guys. I had to make the mistakes. So like, and I'm sure they were out here, but crypto was newer at the time. There wasn't as good of education. Everyone truly thought it was like the future of everything, you know? Um, okay, awesome. So we're good to go. Thanks so much for your time, guys. Appreciate the call. Um, I don't have any other questions I need to answer right now. So we will see you guys next week. Play it safe, play it smart, keep hopping in the charts, and till next week. Goodbye.